it's not a super high growth business, but it's a steady business and it throws off a lot of cash. And so hence our strategy, like a lot of stable value stocks, if you will, is we run the business, we grow it as we can when we have the opportunity. We keep reinvesting in it, and then we take the cash and we invest it in Bitcoin. The software business itself is not very capital intensive, so it's not like a hotel or an airline business where you have to spend billions of dollars investing for future growth. We simply are maintaining an engineering team. We're upgrading the product consistently, and that's built into the P&L.
Of course, a lot of people want to know is more along kind of the insights here. How does MicroStrategy really provide modern analytics experience to their customers?
Well, there's a set of tools that we offer people to build applications extremely quickly. And then we have servers and we have clients. So we allow you to build very sophisticated analytic applications and deploy them on smartphones or deploy them on websites. We also have cloud services, so you can spin up those applications and give them to hundreds of thousands of people in a matter of minutes or hours, and you don't have to worry about the infrastructure. So if you didn't have that tool set, then you'd have to hand code everything with C++ or Java, and it would take you 100 times as long. It'd be very fragile. So that's what we provide. It's kind of like Oracle or SAP. It's a set of enterprise grade tools that do sophisticated industrial strength things if you're a big organization.
Definitely, and this side, the overall business analytics market revenue is expected to grow at an 11% CAGR, and that's through 2025. Do you still see this on track, or are you starting to see a little bit of a slowdown in the industry?
We don't give forward-looking guidance, so I think that the business intelligence software business will be healthy over the long term because our customers have invested decades in their proprietary data sources and their proprietary apps.
Perfect. So, Michael, you mentioned cloud a moment ago. Can you just talk about how cloud analytics adoption has gone for your company in the first and second quarters of 2022 as we see so many businesses kind of transform to that cloud migration?
Cloud analytics is the highest growth part of our business. Anywhere from 20, 30, even 40% year over year growth rates there. So that's definitely a bright spot in the business. And I think it was catalyzed by COVID in 2020. And what you saw is a lot of companies decided that they really wanted to migrate applications that were on-premise to the cloud, and they got comfortable with cloud services. It used to be the cloud was the new scary thing. And then after the lockdowns, cloud became the comfortable, secure path of least resistance for most corporations.
Awesome. So one connection we have between Bitcoin and your company in the early days, we have this ongoing joke kind of about McDonald's and the crypto world and people maybe having to go work at McDonald's if the price falls too low. But your company actually signed an early deal with McDonald's. Can you just talk about that deal and how it kind of transformed MicroStrategy and put you guys more brand awareness to land more deals?
Yeah, when our company was just 40 employees, McDonald's had a problem. And the problem is they spend $1 billion a year or billions of dollars a year on marketing. And so when you buy a lot of advertising and you're buying them in hundreds of different media markets and you're buying that advertising every single day, the question is, how effective is that marketing expenditure? And how does it compare to the previous year? And how does it compare to what you would have expected to have achieved if you had done nothing? So McDonald's, they say in that business, I know I'm wasting half my marketing budget, I just don't know which half. And they hired us to build a marketing analytics product that would sift through every item sold every hour of the day in every store in the world over the course of multiple years. And then they would calculate the correlation of revenues and profitability versus marketing expenditures. That's been it's been a key application of enterprise analytics for the past 20 or 30 years, and it continues to be a pretty big application. And McDonald's has been a customer along that time period. It's been a good relationship.
All right, we're here on the line with Michael Saylor, co-founder and CEO of MicroStrategy. Let's go ahead. Let's start diving into the Bitcoin questions here. And are you worried about a margin call? And is there a price that you would be concerned at for Bitcoin overall?
No, we're not worried about a margin call. We took a little bit of debt, but it was 20x over collateralized when we did it, which means like a loan to value 4%. And so, I mean, if Bitcoin went to $3,000 a coin, we'd have to post some other collateral, but we have other collateral. And Bitcoin, I don't think it will go to 3,000 a coin. But there's a big difference between, say, taking on 10x leverage versus 10% leverage. If you have $5 billion in collateral and you take on 10x leverage, that means you borrowed $50 billion. If you have $5 billion in collateral and you take on 10% leverage, it means you borrowed $500 million. So we had, I think when we went into that, $4 billion of collateral, we borrowed $200 million. So it was a very thin layer of leverage. So I don't really much concern about it. The key with these things is you have to be able to last through the 4-year cycles. So when you lay out your strategy, if you can't last for 4 days or 4 weeks, right, then you're a speculator or a gambler. But when you're looking out 5 years in advance and you think about the volatility, then it's an investment strategy.
Perfect. I think that leads us perfectly into the next question here. You spoke recently of the 4-year cycles in Bitcoin and holding for the long term. In our now, FOMO world that we're living in and what's trending now, can you touch on why this is so important?
Yeah, well, I think the entire crypto industry has a lot of confusion right now. The industry's had a lot of creativity, and people like creativity when they're getting rich, but they're not such a big fan of that when it leads to confusion and chaos and they're getting wrecked. So as you look out over the next 4 years, I think that the market's looking for order, and it wants to emerge from the confusion. And until it gets that order, the free market's testing every component. So you have hedge funds testing the stable coins, and they're shorting every component in the ecosystem. And if they find something and they can break it, they'll break it. I think that you can expect over the next 4 years, you're going to have a variety of things take place. If I look at the future, I think we're going to see guidance and support from the IRS, the SEC, the CFTC, FASB, OCC, and FDIC. And so that's an important part of the industry growing up. I think that you're going to see broader scale adoption on the layer 1 of Bitcoin as a store of value by larger institutions, investors, companies, and a lot more retail investors. I think that you're seeing innovation on the layer 2, which is Lightning, and the layer 3, which is the application layer, like a cash app. You're seeing innovations there in the transactional area or medium of exchange area, because you can move transactions 1 million times quicker and cheaper on the layer 2 and the layer 3. That's an important area to keep your eye on over the next 4 years. And then I think if you look at the entire Bitcoin economy, layer 4 is derivatives. Like MicroStrategy stock is a derivative and GBTC is a derivative. And so you're seeing and a BITO or spot ETF would be a derivative. You'll see a lot of innovation there. I think layer 5 is product. So when you build Bitcoin into a hardware device, a smartphone or a hardware wallet or any other device, that's very interesting. And then layer 6 is services, like building Bitcoin into an insurance product or building it into some other yield product or the like. So it's all of these things are all part of the maturing of the industry, and they keep it exciting.
So Michael, with that being said, I think one of the big questions for people out there is they want to know, are you buying the dip in Bitcoin? Is MicroStrategy continuing to purchase Bitcoin at these levels that we haven't seen in a year?
Yeah, we have a simple strategy, and our strategy is we just acquire Bitcoin and we hold the Bitcoin. So you could think of it as like dollar cost averaging for a corporation. And I think when you're in a chaotic macroeconomic environment like we're living through, where you have a massive expansion in the money supply and then a massive contraction in the money supply, and people are being tossed and turned by uncertainty, then the best strategy to maintain your sanity as an investor is you focus on a basket of high quality property, scarce desirable property that you think that affluent, intelligent investors will want to buy from you in a decade. And of course, we happen to think that Bitcoin is the highest quality, scarce desirable property. And then once you've figured out what that thing is you're going to acquire, then you just keep acquiring it as you have free cash flow. And so MicroStrategy acquires Bitcoin whenever we have extra cash flow available. And because we're a profitable company and we continue to generate cash, we just sweep that cash into Bitcoin, and we designate Bitcoin as our treasury reserve asset. And so you give me an extra $10 million in cash flow, I convert it to Bitcoin. I don't really focus so much on the next 4 weeks or 12 weeks or the like, because there's been like 3 cycles in Bitcoin in the last 2 years where it moves up and it moves down. And if you try to time the market, you're going to be very frustrated. But if you look out over 4 years or 6 years or 8 years, then simply acquiring high quality property with free cash flow is generally a really good investment strategy, and it's a good inflation hedging strategy versus just sitting on cash.